Hi all, welcome to animated video note series created and owned by Manasvi Mehta, founder of businesslikeNotes.com. For exam related notes and chapter highlights, you can visit our website businesslikeNotes.com. So let's begin. Business risks. The term business risks refer to the possibility of inadequate profits or even losses due to uncertainties or unexpected events. Three words on which we need to focus while referring to this definition are possibility, which means there is a chance that business can earn inadequate profits or even incur losses due to happening of uncertainties or unexpected events. Let's understand this concept through various situations. In situation 1, demand for a particular product may decline due to changes in taste and preferences of consumers or due to increased competition from other producers. This will lead to lower demands, thereby resulting in long sales and lower profits. Now, what do you mean by changing customers' taste and preferences? Well, this can be explained with the example of rotary dial telephone, which were very popular in 1900, where every home has telephones, which were then replaced by mobile phones. Now every home, better way is to say that everyone has mobile phones. Thus, there was a shift in customers' taste and preference, moving from telephone to mobile phones, resulting in lower demand for telephones. Now, let's talk about mobile phones. We have many producers selling mobile phones like Samsung, Micromax, HTC, LG, Sony, leading to increased competition, thereby reducing the demand for a single producer. In another situation, the shortage of raw materials in the market may shoot up its price. The firm using these raw materials will have to pay more for buying them. As a result, cost of production may increase, which in turn may reduce profits. In 2019, we all heard that the prices of onions skyrocketed in India and government has to take actions to control the prices by imposing stock limits. Since prices of onions increased from rupees 35 per kg to rupees 70 per kg, restaurants serving dishes where onion is a main ingredient, say paneer tikka, they started selling those dishes at higher prices. Say paneer tikka is sold at 200 earlier, which is increased to 220 now. Business enterprises constantly faces two types of risk, speculative and pure. Speculative risk involve both possibility of gain as well as possibility of losses. Speculative risk arises due to changes in market conditions, including fluctuations in demand and supply, changes in prices, or changes in fashion and taste of customers. This can be explained through a very simple example of trend in televisions. Unlike now, where LCD or flat screen are popular, CRT televisions were popular in 1900. Thus, for LCDs, today at present it's a favorable market condition resulting in gains, whereas for CRT televisions it's an unfavorable market condition resulting in losses. Pure risk involves only the possibility of loss or no loss. The chances of fire, theft, strike are example of pure risk. Where the occurrence of pure risk will result in losses, the non-occurrence of pure risk will be absence of losses instead of gain. Nature of business risks. Nature of business risks can be understood in terms of their peculiar characteristics. Business risks arises due to uncertainties. Uncertainty refers to the lack of knowledge about what is going to happen in future. Let us discuss some of the examples of uncertainty which create risks for business because the outcome of these future events are not known, like natural calamities, earthquake or cyclone, change in demand and prices, that is, shift of customers' taste and preference from telephones to mobile phones, changes in government policies and prices. When service tax was replaced by GST, the tax rate which was imposed on small cars changed from 12.5% to 30%. Improvement in technology, that is, moving from CRT display screen TV to LCD or flat screen TV. These all factors constitute to business risks. Risk is an essential part of every business. Every business has some risk. No business can avoid risk, although the amount of risk can vary from business to business. Risk can be minimized but cannot be eliminated. For example, to avoid fire in the factory or business and premises, we can install fire extinguishers. Profit is the reward for risk taking. No risk, no gain is an age-old principle which applies to all type of business. Greater the risk involved in a business, higher is the chance of profit. An entrepreneur undertakes risks under the expectation of higher profits. Profit is thus reward for risk taking. Degree of risk depends mainly upon the nature and size of business. Nature of business, that is, type of goods and services produced and sold, and size of business, that is, volume of production and sale, are the main factors which determine the amount of risk in a business. Let's take the example of nature of the business. A business dealing in fashionable item has high degree of risk. Why? Because customers' choice and preference in fashion keeps on changing. Second example of size of business. A large scale business generally has a higher risk than what a small scale has. Why? Because in large scale business, there will be more chances of theft, fire, etc. Causes of business risks. Business risks arise due to variety of causes. Let's discuss them. Natural causes. Human beings have little control over natural calamities like flood, heavy rains, lightning, earthquake, affecting property and income of business. Human causes. Human causes include such unexpected events like dishonesty, carelessness, or negligence of employees, stoppage of work due to power failure, strike, riots, management inefficiency, etc. Economic causes. These include uncertainties relating to demand for goods, competition, price, collection of dues from customers, change of technology or method of production. Financial problems like rise in interest, rate for borrowing, levy of higher taxes, etc. also come under these type of causes as they result in higher unexpected cost of operation or business. A very common example is shift from CRT display screen TV to LCD or flat screen TV. Other causes. These are unforeseen events like political disturbances, mechanical failures such as bursting of boiler, fluctuation in exchange rates, etc., which lead to the possibility of business risks. A very common example of other causes is COVID-19. Thank you everyone for watching our video. If you're interested in online classes, email us on businesslikenotes@gmail.com. If you enjoyed our video, please like and subscribe to our channel for more updates. Thank you.